People talk about the yen getting stronger. The yen is just getting normal. Remember that for decades, the yen was moving in 120 to 130 band versus the dollar. It's just going back. I almost want to say, what's the surprise? What's the big deal? Some of the long history Japanese companies that we cover, like Fanuc, for example, were saying 130, 135 to the dollar for this fiscal year in their fiscal year premises way back. I'm asking, what's the surprise here? As soon as that sovereign yield gap between Japan and the US narrows, I think it's natural that the yen normalizes to its decades trading band, and that's what we're seeing. And if what I say is correct, then actually 145, 146 is nothing. You know, we're going to 140, we're probably going into the 130s. Yes, the yen carry trade is history, and we're heading back, I think, to a very different situation. People talk about the Nikkei, the topics as you're saying just now, being down a lot, MSCI in Japan. Similarly, remember that the dollar returns that the index is giving you are actually still pretty respectable because the yen has appreciated close to 10% against major currencies over a remarkably short time. And again, if what I said about the yen normalizing is to continue, actually the dollar returns of the Japanese market remain, I think, very attractive.
Richard, I wanted to ask you about, I guess there's so many things to ask at the moment, but I guess, you know, in terms of the falls we're seeing, how much more can we see this dip continuing, given, I guess the expectations in terms of the yen and the sort of Fed and, of course, the more hawkish BOJ, and as Martin was talking about in terms of the carry trade?
It's a major question, Lin. Thank you. And as you said, a lot of things to ask at the same time. What you talked about just now, Lin, which is the banks, what the bank share prices do is a major question. Those things were down 12%, 13% on Friday. That's GFC. It's Lehman crisis type moves. And you also mentioned that the environment for banks should be getting better if we believe the Bank of Japan is in a slight tightening cycle and that kind of thing. I actually dispute that, if I may. I think if you look at the concrete data on credit growth, the concrete data on net interest margin improvements, there's not much going on at all. And the figures out of banks are decorated with a lot of one-off items like the write back of bad debt provisions. The core business of those companies actually hasn't improved much. And even if the Bank of Japan raises a teensy levels of 25 pips or something, remember, we're still in big-time negative real rates in Japan, and Japan doesn't have an awful lot of credit growth. It's not that kind of an economy. And so I think that the whole rise we've seen in bank share prices, massively outperforming US banks, UK banks, European banks over the last year, the whole rise of Japanese bank share price was itself a bit of a head fake. And yes, people have woken up and smelt the coffee and said 12% down Friday and probably quite a ways to go.